Okay, guys, good afternoon to all of you. Can you hear me loud and clear? All right, if you can hear me loud and clear, give me a thumbs up, or you just give me an L and C right now. All right, quickly do that right now. Now, just to check with you, earlier I saw I played a music. Did y'all get to hear that music? Earlier, I played some music at the background. Have you heard it? Just to double check. Afternoon to you, Louis, Jerry, Janet, Anthony, Susan. Jerry, yes, good afternoon to you. No, you didn't hear the music. Okay. Interesting. Okay. All right. Just okay. So there was no music. I've been playing this for quite a while. In fact, every MAO I actually played that. Then I realized that y'all don't hear it. That's very funny, yeah. Something, don't know. I can hear my voice, but I cannot hear my music. That's so odd. Okay, never mind. It's fine. No worries on that. Now, like I say once again, this is a very, very ad hoc MAO, right? You know, MAO, I only do it on on Monday, Wednesday, and Friday. Now, today is Thursday. So the thing is this, okay? I do it because definitely has a reason behind that. And you can see my hair is totally not combed, right? You can see that I'm really, really very last minute. And I rush through the material for you guys. But I think it's going to be very important. So without further ado, let's start itself, okay? Let's start. Now, the information is very critical and important, especially if you are still holding some position in the market, because this information is really wow stuff, okay? So get your friends quickly now to come in and join us, okay? Because this is going to be very impactful to them. Yep, okay. Let's give it a minute. Let me just share it to my friends, share it to a group. All right. Okay, let me just also share it to my own friends, circle of friends. Just give me a minute. Recently, there are some errors, everywhere. Hi, Maurice. Good to see you. Good afternoon to you. Just give me a minute. Just like to share this right now. So okay, done. Okay, let's go, guys. Sorry for keep you waiting. Okay, because I'm doing all alone, actually. Yeah. Okay, guys, good afternoon to you once again. All right, now today is going to be a very short MAO, even though there's quite a lot of stuff to share, but it's going to be shorter than normal. All right, let's begin. Today is the 14th of July, 2022, Thursday. This is not a regular MAO. Usually MAO is on Monday, Wednesday, and Friday. Today is an ad hoc one. That's why the word special MAO session with Cal. Okay, as you can see, whenever I write special means I got something very important to share with you. Okay, very important. Now, the thing is this, I would love to do a lot of like content-based short videos to attract crowds, but I repeat myself, I'm not keen to doing that. I just want to share market information with you, those real stuff than just do sales pitching. But undeniable, because this coming Saturday, I have a basic class. So I will do two short slides to talk about the basic class, okay? But just allow me to do that. But majority, 98% of the time, I'll talk about the market, okay? All right, now we have the CPI data, 9.1%. Oh my goodness. Not only I was spot on for that itself, right? I also tell you what will likely be happening once the NIA come in, right? I told you when the market, likely the CPI data will be a NIA, and then what will happen first, then what will happen next, and it really all happened, all right? Now, I told you the CPI data is a NIA, and it really happened. Now, the Federal Reserve is going for it. Let me explain to you this going for it. What's the reason for that? And of course, the most important thing is how the Wall Street guys are actually looking at this right now and how are they going to interpret the data and do what's next. And apparently, they have done something. So stay tuned all the way for this MAO. Yeah, don't miss it, any part of it. Let's go. Now, first of all, same thing again, disclaimer apply as usual. All I can tell you this, all information, statistics, data, I get it from the internet and some of the very good YouTubers. And of course, I'm very selective my YouTuber. To me, they must be able to present real hard facts. And I always check the facts first before I upload. That means that whatever they say, I will check the facts first to see whether their source is actually right. And of course, if the source is the same original source, then I will share. Of course, some YouTuber, they will have their own views and opinion. So I will have my own too. So you will notice that probably you see some of the common copy, literally I just copy from them. But the way they interpret and the way I interpret will be totally different. So again, it's back to your owners to go and do your own research and do your risk management. Okay, very important. Yeah. Okay. Now the thing is this. Wait, I didn't update this one. Okay. All right. So we all know that, right? We have just saw the data from yesterday, Delta, not too bad. But now we're going to have Thursday, which is today in the evening, where JP Morgan Chase, Morgan Stanley, TSMC is going to have their data. And I'm going to tell you upfront here as well, I don't think the data will be good. Even the data is good, there will be provision for expectation. The guidance will be not so good. Okay, so take note of that. I'm going to write it down for you guys. I think that the guidance, right? Guidance means that the provision, yeah, for the next quarter itself will be moved. The guidance itself will be down. Okay, that means that they are looking at they must protect themselves the downside, because Wall Street work this way. You see, it is much easier to do this. If let's say now, if they want to push the stock market higher, they'll actually lower down their earnings expectation. So when the data comes out better than expected, so-called, right, then the market will work easier. Now, similar thing is, right, if let's say the boys want to bring the stock market down, right, what they always do is a bit scary, but they do that, is that they may make the guidance a little bit higher, and then when the result not so good, right, so-called, the market will jump down in price, and that is how they do it in Wall Street. So I believe that this time round itself, right, they will mark down the guidance for this time. So watch out for this, for especially Morgan Stanley, because Morgan Stanley is kind of bearish at the moment right now. Yeah, so watch out for this. This is the first thing I want you to take note. Okay, today, important day. Now, the thing is this, yesterday we talked about a potential fake news on the CPI data. And of course, the fake news was at 10.2. I say that most likely it's all right. It's going to be the similar direction, but I don't think it's 10.2. And truth be told, it's all right. The final figure was not 10.2, it's 9.1. But it's good enough. It's a Nair. It's a Nair. Nair is 9 plus, yeah. So it was pretty good, right? And of course, the thing is this, prior to that, right, the VIX indicator was actually trading higher. But yesterday, something incredible. The VIX actually got pushed down. That means that, right, initially the VIX jumped up first, but towards the end, right, it got pushed down. Very incredible. A 9.1 CPI data can actually get a VIX pushed down to a lower level closing. That's very incredible. I'll explain to you why, and you understand this. And there's some maths that you need to take note so that you can actually profit from the market. So watch out for the data coming up. This is going to be very impactful, guys. Get all your friends to come in. They will thank you for that, and you thank me later, because you don't want to miss today's special MAO, okay? Very critical, yeah? Very, very critical, okay? All right. So, of course, let's just go to the real thing first. It's a joke to me, 9.1. So the thing is this is higher than expected. And of course, consumer pressure is intensifying. But the main drop here is not just 9.1. Is that the people are getting upset because why? From 3% to 5% to 7% to 8.5%. And today it's a 9.1. And of course, this 9.1 is all right. It's not going to stop there. So this is where the joke comes in. It's like everybody say that, look, this is like inflation. Look at it. This is Jerome Powell and another central banker, but they look so identical. Even the color of their ties are identical. So people make a joke of that and say that, look at it. This is the before and after, and after before. Okay, anyway, very fun, right? Okay. But the point is this. Now, this is where it gets very scary. The US real average hourly earnings from 1982 to today, that means 40 years history data, are showing that we are back down to a level of craziness, okay? We are back down to here. That means that the last time we have this was back in pandemic time. It was pandemic time, we have a very bad hourly earnings. But now we have increased the balance sheet by $5 trillion, stock market at 30,000, but yet the real average earning is actually at the lowest point for the last 40 years. Oh my goodness, this is terrible. This is actually very, very bad. So that's the reason why things get very scary right now. Okay, so of course there were many reasons given for all the inflation nonsense. Okay, example, back in 2021 when it was 6.2%, the CPI are 6.2, they say it's just transitory. Okay, fine. Then when it's November, they say 6.8%. When it was 6.8, they say it's greedy corporation trying to make the market higher and get advantage of this. Okay. Then at December 2021, they say that it's a supply chain bottleneck that causes it. Okay, we can still buy it. But you know what's called the boy who cried wolf, right? We cried too many times. People get sick of it. In 2022, in January, they still tell you that a 7.5 CPI data is still a supply chain issue. Then at February, it's 7.9. They blame it to the oil prices. That was before the Russia war. The Russia war was a late February to March. Then, of course, then what happened? They tell it's Putin that causes the price up in March itself. Then, of course, in between, the number got a little bit lower. Then after that, bang, we have a 9.1. So please insert the excuse right now. So they'll tell you that, oh, well, it is Russia, it is corporation, it is because, no, whatever. They'll put something there, and I'm sure this excuse itself will be, again, accepted by a lot of us, and then we just take a look. Now, the thing is this, they're telling you now, right now, Biden came out in the White House and say, look, okay, we have a higher number, but don't worry, it's still okay. 9.1% is nothing. Come on, it's nothing. It's 9.1 only. Relax a little bit. So, of course, look at it. The scary part is that the all items now, based on the latest data, is 9.1. That means that we're talking about all items add together, result will give you a 9.1. But if you actually exclude less food and energy, is 5.9. So they say that, hey, 5.9 only, nothing so scary. I don't know where the hell they get this data from, but we all know that this data doesn't make much sense because why? I give a best example to prove it to you from another country perspective. Yeah. Now, Canada is actually part of US, right? Okay, so apparently, according to one of the YouTuber, she's saying that, right, the vegetable called yam leaf is a very nice vegetable. All right, now about 1 kilogram of yam leaf, okay, it costs about 15.99 Canadian dollar. So if you multiply by the US dollar, it's about 19 US dollar. And if you multiply by the renminbi, right, it's almost 90 yuan for one bundle of this yam leaves. All right, this is really ridiculous. And this is like, you must understand, just a couple of months ago, this was like about only 4 Canadian dollar, about 4 Canadian. So the increment is about 400%. Think about this. So imagine you imagine that you want to have a plate of vegetable. 5 months ago, it cost you about $5, $6 in cost plus all the ingredient, now easily $20. That is how crazy the price in Canada. So imagine now it's just next door, right? So obviously the US side is having the same problem. And of course, as I said again, my cousins stay in US tells me that the price is ridiculous already. So that's undeniable. That's why some country like Sri Lanka is totally bankrupted. Alright, they are very up. Right, people are getting upset. They are getting very upset because why? The prices go crazy and the food is lacking. Now, not only money cannot buy those things itself, right? People are getting very, very upset. And when people get upset, it don't work. And that what happens is a spiral. You're going to hit everybody across the board. So, of course, if a country get bankrupted, then what will happen next? It will have a spillover effect, yeah? So the thing is this. The very important thing is this. This is why I'm doing this MAO right now. Canada, Bank of Canada, if you didn't notice, this was not the mainstream media, by the way. They have increased the policy interest rate, all right, by 100 basis points. Oh my God, 100 basis points. Such a big news, right? But no one talked about it. Everybody very quiet, right? Yes, indeed. So apparently, it was a surprise move. Now, everybody was looking at 50 to 75 basis points at top 75, but the Bank of Canada, BOC, Bank of Canada, came in to actually increase it by 100 basis points. Now, this is going to be crazy because take note now, some paper in hand. Watch this, okay? There are two important dates right now to take note, okay? The first date is 27th of July, FOMC meeting. That is where Jerome Powell and friends is going to do the 75 basis point. I can guarantee CHOP is 75 basis point minimum. Why I use the word minimum? Because Bank of Canada is now 100 basis point. Yes, 100 basis point. And with the 9.1 right now, right, there is actually a spillover effect now. There is a chance of 100 basis point. There is a chance. So 75 is confirmed. It's confirmed. Now it's only whether it's 75 or 100 basis point. And the scary part is this. on the 20th of July, the next day, is the US second quarter GDP figures, and it's basically the data from April, May, and June. So obviously, June CPI data so high, all right, unemployment data have been quite flimsy. So what will likely be from the Atlanta Federal, report, right? You notice that was a pretty accurate one, 99% accurate. There's going to be a second chance that there'll be a second quarter of negative growth. And this is going to ring the bell because 2 quarters is usually a very close to a recession. And they've got one more quarter, that's it. That is a confirmed official recession. Now, some people use 2 quarters, some use 3 quarters. It's really depending on the position. But 2 quarters is good enough, all right, with 6 months already. So this is the reason why now there's an expeditious tightening about traders going fully pricing a 75 basis point from Federal Reserve. It's fully priced in already. There's no other, no doubts about it. So initially it was before the CPI data was still about 50, 60, right? But now confirmed, we fully price in a 75 basis point. The question is why 100 basis point, right? I come to you very shortly, okay? But of course, before that itself, right, Joe Biden came in already. After the thing happened, the data came out, Joe Biden came in and said, you know what? I understand. A high inflation data is actually not acceptable, all right? We all understand. But you mustn't take too much into this, guy. Let me explain this to you. So Joe Biden actually explained why it's not a concerning factor. Let me explain this to you. So Joe Biden, through Washington Post, says that inflation is unacceptably high, but BUT, not as bad as it looks. All right? What do you mean by that, right? So apparently, from the White House official data, it came out and says this, okay, this from White House, blah, 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 blah. Okay, the key point is the oil price is down by 20% from the mid-June high. Okay, I agree with that. The crude oil price recently went up all the way to $124 a barrel, and now it came back down to about 94. Yeah. So indeed, Joe Biden is absolutely correct. It's down by 20%. So definitely, we are going to expect this August itself, right? In August, the CPI data will be better for June's CPI data. It will definitely be better. Again, slightly better. Okay. But more important is this, okay? The most important is this statement here. That's why I say Federal Reserve is ready to act. Why? Finally, I will continue to give Federal Reserve the room that it needs to help it to combat inflation. Now, this statement looks okay, right? But I can tell you this, if you look back at the official statement that White House gave, the last time they put that, White House is putting inflation as a top priority. White House. But now become the Federal Reserve, okay? We'll give them enough room. So what I'm trying to say is that last time was White House problem. Now it's Federal Reserve problem. So Federal Reserve, you better go and do your shit properly so that, right, you better get things up properly, all right? If not, it's not right, I go after you. You understand my point? So it's like basically kicking the responsibility back to this Jerome Powell, right? So you can see right now, right, Federal Reserve now is going to be under very severe what they call stress, and most likely they'll just whack it pretty 75 basis point. But they know that if they whack 75 basis point, the stock market will behave irrationally. So what must they do? Yes, the PPT must come in. The PPT must come in. So that's the reason why I told you most likely after the CPI data, the PPT, the plunge protection team will most likely come in. I already tell you that will likely be happening. So yesterday we had this MAO, right? So let's just go back and listen to what I said. If the thing's not clear enough, I apologize on that. Yeah, let me just try to make it louder for all of you. Give you a moment. Yeah, let me see what can I do over here right now. Okay, just give me a moment. I see whether can I connect the thing properly. Go on, yeah. Forgot that I need this. Just give me a moment. Okay, here we go. Now, guys, once again, quickly get your friends to come in to listen to this MAO because there's something very, very important to share with you before we go to the charts. Okay, very, very important. Yeah, no kidding. Okay, let me just see whether I can get my thing connected. Seemingly can't. Okay, with that. Never mind, then I just go straight to the charts first and take a look here. So, okay, there we go. This is what I shared yesterday, a quick one. Okay, so guys, can you see that, right? It was really something that I shared yesterday. I told you guys that the likelihood the CPI data itself is a higher, and likelihood because of that, the algorithm will just slam down the market. Okay, never mind, you miss out the hearing, it's okay, but you guys remember that, right? I got the wording at the bottom. Okay, so the market will really come down. As I told you, the market will come down with the algorithm, and I did say that it's time to book profit. Okay, it's time to book profit, yeah? Okay. Dog barking. There's no dog. That is my wife cooking, knocking the food, I think. Okay. Anyway, my point is this, guys. It doesn't matter. Okay, you guys was there yesterday, and basically 500 people watched this video already. 500 people. So it proved to you that whatever I share is really spot on. Yeah. Yeah, really spot on, right? So do me a favor. All right, can you do me a favor? CPI spot on. If you can do that for me, it'll be excellent. It'll be the best way to, to thank me for that. So yesterday when the market plunged down, right, I get everyone, all my traders, right, 100 over traders who are online with me. I tell them, say, let's book profit right now, quickly book profit. And of course, the market plunged all the way down below 31,000, went down to 30,600 series, right? Congratulations to all of you, okay? All right, congratulations to all of you. Well done, guys. This is really the point here itself, okay? So, of course, what to happen next, right, is even more important coming now, okay? Today can be very, very, very important. And of course, I'm very thankful for my students. They really remember what I say. They watch my MAO, even though they watch in the afternoon or in the evening. But they remember that. They actually tell me, Cal, thank you. It was spot on as MAO. It was clear. The market really come out on snire. And then after that, the market came down and recovered. Everything was spot on. Thank you very much. This is the best way to thank me. I really appreciate it. Thank you guys so much itself. Okay. Now, this is not the end yet, guys. This is just the beginning. I'll tell you what will happen next. This is scary. But before that, let me do a short advertisement right now. This coming Saturday will be my last basic, the last one for me to coach, right? Basic will still continue, but it won't be coached by me. It'll be done by my colleague, Richard. So for me, it's now, right, I'm going to move on to the next level, do other stuff. So this coming Saturday, 9 a.m. to 6 p.m. would be my own last basic coaching. So if you want to join TWB and learn the fundamental basic of how the color change is, NLP is, KSI, join us, all right? Contact us through Facebook, all right? And then we will get back to you. Now, remember, recently someone is carbon copying us, okay? We do not sell crypto. We do not work with Binance. We do not sell you any crypto-related products, okay? So only if you actually know the right person, just verify, double check, you can contact us, okay? Call person directly. If there is a real genuine person, Susan will be the one picking up the phone, or Richard, okay? It won't be someone else, no angmos and stuff like that, okay? All right, so take note of that. This is coming Saturday. This will be the final class, the final one for me to coach, okay? So if you want to join us, quickly now contact. It's very cheap. It's only $388. This is just a very beginner class for you to learn how to use the TWB system. Okay, thank you. All right, moving on. Now the thing is this, despite how scary the CPI data, the fear and greed index are only dropped by 1 point. Yesterday was 25, today only 24. Oh my goodness. So after such a big hoo-ha in the market, such a big CPI data, and yet the whole fear and greed index dropped by only 1 point. Don't you find it's really crazy? Never mind, I say you can do all the manipulation all you want by informing you guys that this is the figure I share you, right? It's a very important figure. I found the number is 12, okay? To be precise, the number is 12. So which means that as long as the market stays currently above, most likely there'll still be some potential selling. Only the time you see this fear and greed index go to 12, that will be the best time to buy. Okay, that will be the best time to buy into this. So watch out for this, guys. When the fear and greed index go to 12, bang, that is the time to buy. At the moment now, we are 24 now. It's almost like 1 time higher than the 12. So which means that I rather stay on the sell side than the buy side for time being. Okay, heard me, yeah? Okay, let's continue. So let's go into some greater details on the CPI data a little bit more, okay? Now you can see that the CPI data, you can see the core CPI is higher by a little bit, but the main thing is this one here. This is not 8.8. 8.8 is a forecast, yeah? The last month was 8.6, so it was a very big jump of 0.5. Okay, it's a very big jump on this itself. Okay, it's a very big jump. So the question is this: if you look back now, the last 5 years, this is now at the highest level since 5 years ago, from 2018, before pandemic, to now after pandemic. So that means that we are still very far away from the pre-pandemic. So the pre-pandemic itself, the inflation, the CPI data is really at 2%, but now we are at 9.1%. So seriously, to really go down, we must down by 7%. To drop by 7%, that's a lot to ask for. I mean, seriously, how to drop inflation by 7%? There's a few reasons. There's a few ways to do that. Number one, okay, the first one is you have to you have to bring down asset prices by 30% on average, okay? Second, you need to bring stock market down by another 20% at least. You need to bring crypto market out of the context. All these things must be done. Okay, if not, it's not right, it's impossible to go down. So that's the reason why I felt that Federal Reserve will definitely do two things. They will actually increase interest rate regardless, really don't get the help because they are throw the ball by Biden, but they will try their best to get the PPT to come in, but they will not really, they also know that putting PPT in every time is going to be a fruitless bet. So they will do it, but they won't do it so heavily. So this one, I'll tell you more in detail shortly. Don't go away. Today is going to be fun. So if you look back at the moment right now, right, the data that I want to share with you, okay, you can see right now, this is the 5 years data. So you go to the maximum count, right, maximum, you can see that, right, the last time we had so high level was somewhere back here in 1972, 1973 to 1974. That means that this period of time. Now, this period of time was during the 1973 to 1974, the very big Wall Street crash, where the market came down by 40%, if you remember that. That was a period. So when inflation was going up to that point, 11.9, that was where the stock market came down very badly, 1973 to 1974. Okay. The next time we saw something similar like this was back in 1980, right? Now, that time itself, did we have a market crash? Yes, we have, but not the same magnitude. So that was where it went 14.8, and that was where what do you call, what's the guy named, the Federal Reserve guy? Oh gosh, I suddenly lost his name. Oh dear, I suddenly lost his name. The guy who came in very strongly and then he began to hike the interest rate all the way up to 14%, if I'm not wrong. Yeah, something just, what's his name? Suddenly just lost his name in my mind. Okay, we're saying so much. Anyway, so because of that, the stock market did come off, but not as crazy at 73, 74. So that was only 2 times. That was the last 2 times when we saw something like this. Yes, Volcker, correct. Thank you, Alison. Well done. Yes, Paul Volcker. Thank you very much. Sometimes there's so much information you just miss out something here. Yes, so which means that the last time is right, when this thing hits this point, when it hit about 10%, all right, the stock market really reacted. So that means that this is the one. If anytime, if the 10% really comes again, that's it, man, my friends. We're going to have one more slap in the face in the stock market. So that's the reason why it is very, very scary to do this. But like I say, once again, this is what's happening right now. Now, let's take a look over here, what's called market manipulation at its best. Now, yesterday we saw the market, no, the day before we saw the market was hovering on the upside, right? Then very interesting, at 2 a.m. onwards, the stock market just plunged down very fast. Now, of course, they say it was selling ahead of the CPI data, but I was just questioning upfront. The question is this: how is it because they are selling ahead or because they know something that we don't know, right? So what happened is, obviously, yesterday the market really came down. So if they sold on average at 31,200, right, where they sold, when the market hit this low itself was 30,550, around there, okay, 550. So that means that they saved themselves almost 700 points of profit. And then after that, from there, they push the market all the way up itself, okay? They push it all the way up. So that means that the manipulation from them was fantastic. They sell it the day before, and then after that, they push it down, the bottom, they buy it up. Now, who has this type of power? Only who have such a way to know everything and then buy, sell like this. So the one and only, in my opinion, is a plunge protection team. That's why they sell it down and they bring it up. So it's exactly what I predicted, the sell first, buy later maneuver that they did yesterday. Okay. So again, that proved to you market manipulation is at its best. All right. Now, this is where it gets very interesting. Everybody now focus here. This is going to be a very, 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 very important chart. Okay. So important. You must learn something here. Okay. So what happened is this. I was watching the screen yesterday, watching the market. And what happened was the market was steadily going upwards already towards the CPI data. This is the CPI data before the market push up. So suddenly, right, at about 8:28 p.m., I was watching the screen. Suddenly, the Dow Jones just shoot up all the way to 31,300. Suddenly, just push it up. And I can guarantee you a lot of stops were triggered, okay, including one of mine. All right, my trailing stop. My shot was much higher. Then a friend of mine asking me whether to put on trailing stop, and I agree with his advice. So we put a trailing stop at 31,300. Now, do note, at that time here itself, the Dow Jones was at 31,000 only. So which means that in the space of 2 hours, right, the Dow Jones went up to this point here before the push up. This was only at 31,100 plus. Then suddenly out of nowhere itself, right, they just pump it up and cross 300. And obviously, why 300, right? Because that is basically everybody will put their stop loss over that area itself. I'll show you later. All right, so of course I was stopped out at 8:28. I was like pissed off. I thought, oh shit, the data must have leaked out, must be very good, right? Then when I saw the market instantly, when I saw the Nair, right, oh my goodness, the market just plunged all the way as I expected. Pam, 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 pam. Go down all the way, all right, all the way to here itself at 30,530s area. That was where I quickly messaged all my friends, all of you guys, right, to quickly take profit. For those people who received my message in my phase 2 or my 1515 project, right? Okay, if you receive this message, right, then please key the word receive message. All right, that means that if you receive that message from me telling you to take profit, right? Can you put the word receive message? So to just show to people that I really got sent and see how many people I receive it. So what happened is that the market really slammed down, okay? And that point itself, I know that the plunge protection team will sure come in, guaranteed. And truth be told, okay, how do I do this, right? I teach you now a very, very simple trick here itself, okay? Very simple trick. I'll show it right now. Just be a moment, yeah? I'm going to show you this very simple trick here, okay? Okay, watch this, everybody. This is going to help you a lot later, okay? So what I did was that if this was the highest, this was where the market was and it sold down, right? What I did was I take the distance between the opening of this bar and the closing of this bar. And then what happened? I divided it by 2. I divide it by 2, okay? So what happened is that means this is point A, this is point B. I take A and B plus together, divide by 2, I get point X. Okay, now if you're a PTP trainer itself, right, you will know what is this all about, right? Okay, never mind. Why am I doing this X? Because I know that once the market bottom out over here, the market will recover and it will go up to X. And really, look at it, the market really stopped at X area. This is TA at its best, okay? And I told you guys, really everything is calculatable. Once you join TWB, I'll tell you how to calculate all this information, which I can tell you not many traders will do that. And of course, as long as X don't break, the market is kind of confirmed to go down again. So everybody now, take this number, 30,953. This will be the number to watch out for today's market. As long as the Dow Jones stay below 30,953, the Dow Jones is still going to go down. But if the Dow Jones can cross 30,953, right, the market likely will go back up again. So quickly now, take a piece of paper or a camera, take picture right now. 30,953. Hey, wait a minute. Where got this red color line? Okay, very simple, right? Now this is the bottom of the market. Okay, the bottom, right? Right. So what I did was simple. I take this number, okay, and take the bottom. Okay, add them together and divide by 2. Yay, I got the middle again. So this middle ground, this figure itself, right, is roughly, okay, it's roughly about 30,700 area, okay? So you notice that the market itself, after it hit the point, or the point X here, right, it comes down, right? You notice that it actually stopped here, and then now it's firming and having a bit of resistance support relationship here. So in short itself, right, 30,700 now will be the support level for the Dow Jones for this wave. 30,953 will be the very good resistance level to watch. Now, if the market later on pulls below 30,700, the selling will likely continue. Okay, got the idea now? All right, if you actually understand this, right, put the word, okay, clear. All right, CLEAR. Oh, thank you, Yao Tong. All right, brother Yao Tong, you're also online. Fantastic. All right, so that means that now this figure, everything clear. All right, if you understand what I say about this, put the word CLER clear right now in the group chat. All right, so that I can make you guys understand this. This is a very important chart. Why is that so? Because let's push out the Dow Jones now to take a look and compare where the Dow is right now. Yeah. Okay, the Dow Jones now, as we can look at the chart right now, just me a minute. Okay. The Dow Jones now is trading at 30,796. All right, and if you look at the chart in 15 minutes, right, it's still at a pretty strong level. Okay, a minute. Okay, so as I said again, 30,700. So 30,700 is somewhere around here. Let me just draw for you right now live. Okay, here we go. All right, so this is a very important support level that the market is watching. So as long as the Dow stays above 30,700, the upside is still okay. The upside can still go up all the way to 30,953. But of course, if later on, if the Dow Jones goes below 30,700, there will be some profit taking. Okay, so be careful on this number. I'm sharing you live because I want you guys to benefit from it. Okay, you can see that I really am very committed to give you the best, and it's all absolutely free. You don't need to attend a preview. You get to hear from me and utilize the data and make the money. And of course, once you make the money, if you feel like, hey, Cal, you are pretty decent, I want to join you, your TWB family, then just join us. Okay, I always prefer to do that. All right, that's why I do have a big number of students. I only get very niche group of students, but these people are always the one that usually make money, and that's why they join me. Okay, all right. So with this information itself, right, let me tell you more in detail for yesterday. Wait a minute. Cal, yesterday the market initially after the CPI data went up first, came down. Then why did it shoot up then? Okay, other than you say about the algorithm, is there any real reason? Now, of course, algorithm is the one that pushes the market higher, but some people will prefer me to find some valid reason that is like, you know, something that you can accept versus algorithm, right? So all I can say is I got it for you. I actually learned from one YouTuber, and then she's very good. She found the data, and all of you, I want you to take a look at it. Thank you, Susan, once again. All right, so let me explain to you how it was done. Wait, what happened? Yeah, something went wrong in my screen here. Okay, all right, let me explain to you. Okay. On, yeah. Okay, so let me explain to you now what actually happened yesterday. Okay, so apparently, the reason why the market came down first, right, was because the market was already having traders expecting 100 basis point yesterday, yeah. So like Wall Street Journal actually says that more investors bet the central bank will raise interest rate by 1 percentage point with 100 basis point by this month. Okay, that's why you can see suddenly the target rate probability shoot up all the way to 100 basis point, right? It's 75%. Now do note, before yesterday itself, right? Before yesterday, it was only 3% chance that you will hit 100 basis point. Just overnight, right, it becomes 75%. That's a very, very big jump. Okay, very big jump. Then why did the market after recover? Oh, because after that, Wall Street Journal come in and say, you know what? No. Likelihood is still going to be 75 basis point. Now we all know that Wall Street Journal is actually the mouthpiece of Federal Reserve, right? So when they come out and say that no, it's likelihood that it will be only 75 basis point, the market say, oh, okay, 75 basis point, we all expected that already. So that's the reason why the market goes up. Now this is kind of crap, right? But that is a real timestamp reason. But to me, it's a timestamp reason plus the plunge protection team came in and they sell the idea to someone else to make sure they publish someone else papers and stuff, and then that is why the market got into the buying mode. So you see, this is market manipulation at its best. You can't afford them because everything is there. Technical is there, price action is there, blah, blah, blah. Everything is there. Okay, so what is it all about first? Before we go into the extra alternate market news, I want you to see some quick news, very fast one on the news side, because there's so many important news right now. Okay, so first of all, we know the 9.1, I can skip this, but definitely the scary part is that the yield curve inversion between 10-year and 2-year has reached the biggest point since 2000. Now remember, in 2000, we have the sell-off on the Nasdaq crisis, right? And the market after that sell down for 2-3 years. So that means we are going back to what happened in 2000. And we are still basically, like I told you, we are just like a frog in a cooking hot water, but because it's going boiling, the frog cannot feel it. So that is whereby we have a big problem. Now, will the inflation be at a high level? It will be. Now, listen to me once again. I believe that we will hit a peak very soon. Likely this is the highest point. Why do I say that? Because now, right, this 9.1 is based on June data. We cannot deny this. Recently, wheat, copper, crude oil price has already hit high and came off. So very clear, mathematically speaking, July's number will be lower than this June data. No need to see 100%. Okay, no need to see one. Unless dramatically the next 7 days, 8 days, the crude oil price shoot to 150 because of some alternate reason. Okay, if not, we are likely to see the peak for now. Yes, but we have seen before when the market hit the peak, doesn't mean the stock market will react accordingly. I'll explain to you why in detail very shortly. Okay, so of course Singapore already come in by coming in to step up inflation with the surprise central bank tightening. Now, you know, MAS, they do not come in unnecessarily. If they come in itself, right, this is going to be watching it. And do not, if you didn't know this was the fourth one in the past 9 months. Okay, and of course, New Zealand and Canada, I told you, right, they already increased interest rate. So when everybody increase, US also must increase together, right? So that is something that you know. And of course, Singapore grew 4.8% only. This is missing the target. We are supposed to be a 5.2, but we come out of 4.8. So with Singapore, such a frontier in economics growth is now actually missing the earnings. You can expect that the other countries will not be any better, if not worse. So that's the reason why there's a very good chance that, right, Federal Reserve will actually quickly now need to cool down this whole thing by increasing interest rates so that the inflation can come down ASAP. And of course, right, one thing is that the cryptocurrency space will be hit. Surprisingly, yesterday, the Bitcoin went back to 20,000 again. But to me, it doesn't matter. It's just a matter of time. I see 18,000. Now, the best part is Jim Cramer is saying that the Federal Reserve is winning against inflation, and he feels that it's time to buy. Okay, Jim Cramer calling for buy. So he says that, right, that even the Euro chart will recover soon, and that will lift the market even better. So Jim Cramer is very bullish in the market. Don't you like that yourself? So that's the reason why the federal Fed funds traders are all betting a 1% increment instead. Now, of course, this could be a smoke screen, and they're just trying to call you off. But the thing is this, copper price is coming off. Now, copper price coming off is a very clear sign inflation is peaking, but when copper price is coming down, it's a leading indicator of economic health. So which means that this is not good at all. When copper price goes down, usually the stock market is going to come down. And of course, Tesla now has a big problem here. Their AI leader, Andrea Kapati, is leaving the company. He is the AI leader for this Tesla, and Tesla really need this, right? So apparently now with more and more people leaving and the big lawsuit that's coming up, this is going to add more pressure to Tesla. And definitely if Tesla share goes down, if Bitcoin also go down at the same time, we'll have some big issue here. So that's the reason why the crypto winter now is no longer just a winter. It could be worse than that. And that's the reason why traders are getting upset. Okay, so this is the very good flashback and to let you know some of the very important news. And once again, you get it straight from the horse's mouth is Cal. Okay, all right. Okay, now we're going to go to the alternate market news. Stand by for this. This next 5 minutes is going to blow your mind away. Now, first of all itself, right, you must understand that the stock market has been rising non-stop. But the problem is this, Morgan Stanley, Goldman Sachs, Bank of America are bearish on the market, but Citibank and Deutsche Bank has now come in and say, nope, the market is going to be good. But the most important is our Jim Cramer. Yay! Jim Cramer is very bullish, okay? Now look at the market right now. This is using the very long-term moving averages, okay? The stock market hit a peak right here. The next lower highs are all very clear, right? So that means by right itself, right, there's a very good number that everybody looking at it is for 3,480 level. That is one of the number that people are watching now. Take this number and take note of this number, very important, okay? This number is going to be seen very shortly again. 3480, write it down somewhere, okay? Now, Jim Cramer is bullish, okay? And he even said this, don't worry, guys. 13 July will be the bottom, which is yesterday. Hey! Jim Cramer said that the market will soon bounce and have a strong rally through late August. So what do you think, guys? Do you think that Jim Cramer will be correct? All right, come on, give me your feedback right now. Do you think that Jim Cramer will be correct? If you think he'll be correct, just say Jim Cramer correct. Or you say that Jim Cramer will be wrong, let's put Cramer wrong. Okay, let me see how many of you actually think that Jim Cramer is correct. He's actually telling you now, 13 July will be the bottom. What's up, man? Okay, like I say, Jim Cramer is a very unique person, really unique. I mean, he for his own talk show, he's very good, very nice. I mean, his charisma on his own talk show is fantastic. But whenever he and I think Santoli come together to, or the other guy on CNBC come together to do the live hosting, right, I really think the air is so bad that it really kills. All right. Anyway, this is my view itself of Jim Cramer. Okay. All right. Okay. So this Karine said that yes, fitted for 1515. I think the market will go up. Yeah. Okay. Karine said that. All right. Chua also said that Jim Cramer is correct. Sherwin says never correct before. Correct if you get inflation in control. That's on Ravi, and of course Cynthia said Jim Cramer is correct, right? But this Louis say he's wrong. Anthony say he's wrong, and Yok Lian say that he's wrong. Andrew also say wrong. Okay, I gonna say this upfront. I don't think he's correct. I don't think so. Yeah, I don't think so. Okay, why do I say that? Right, I'll give you my reason very, very shortly. Okay, I don't give by saying, I tell you my reason for that. Yeah, okay, stand by for this, everybody. Now the reason is because yesterday we have a very strong recovery. That's true, but you can see that, right? This is using another YouTuber screen. You can see that, right? The buying activity is not as strong as the before. The volume is not as high as the day before. So if let's say now it was a bottom out, usually the volume will be higher than the previous day, but the volume of yesterday is lower than the previous day. So not very correct, because if the Wednesday volume is higher than Thursday's volume, right? Correct? Is it correct? Today's Thursday. Oh, sorry. It is Friday. I say today's Thursday. Okay. So Tuesday volume is higher than Wednesday volume, right? So that means that Tuesday volume, the market already have wind that it was coming down. Wednesday, if it's going to be bottom out, usually the volume will be much higher, but it isn't. And the buying is not there. And the thing is this, for those who love stochastic itself, right, we have a bit of negative, so we have a potential crossover on the stochastic itself, right? It's something to take note of. But what is incredible is S&P 500. The S&P 500 also have the same thing. It also has the same thing itself, right? We have the potential crossover on the stochastic, and very important, right? The Bollinger Bands itself, right, is actually coming together. Now you see, I also know my TA very well. I know my Bollinger Bands, I know my MA, I know my stochastic. I used to use them, but just I know that it doesn't really work. So that's why I put them aside and create my own TWB indicator. But what I'm trying to explain to you is this: if the conventional indicators are giving you the downside sentiment, right, I cannot see why the rest itself can be any better. And of course, my own indicator is telling me something else also. Okay, so with that information, right, let me go into something even more deeper. Okay, let's take a look. Yeah. Now this is where suddenly last night, suddenly someone sold $28 million worth of SPY put option. Okay, so yesterday out of nowhere, somehow the news came out that someone sold as much as $28 million. Now this is not a small figure. Now previously we're talking about 2 million, 3 million. It's negligible. It means that if you want to like fool the whole market, right, spending 2-3 million to get 10-20 million or 50 million profit, I can buy you. But yesterday it's all right. This set of put options is $28 million worth. Okay, very scary is that the strike price is 263. The current price now is 280 plus, right? So that means it's another 200 points to go at the moment. And of course, very crazy stuff is that the date, the expiration is actually on the August the 19th. August the 19th. So in short itself, right, that means somehow someone is pretty confident that the 27th and 28th of July, the numbers will not be anywhere fantastic. And most likely from now till 19th of August, right, the market will be down. So of course, the thing is this, maybe these people can get it wrong, because why? Maybe Federal Reserve going to come in and punch this guy up or down and then let them lose money. It is very possible. But on a flip note itself, right, this figure, $28 million put options is one of the bigger one I've seen recently. So I'm just going to give myself a benefit of doubt over here. So I'm going to tell myself this. I'm going to check my charts later and see whether what it says to me, and then I will share with you. But still, this information is not found in mainstream media. It's all for you today. So I hope that you guys will like this sharing and enjoy today's MAO, all right? Because you must understand the volume itself of the previous day was 21.3 million, 31.3 billion, but yesterday was only 2 billion. Sorry, the other day was 2.1 billion. Yesterday was only 2 billion. So it's really not as high as what it used to be. All right, something very, very interesting here. So, all right, remember this. This chart was shown you yesterday. When inflation goes up high, it will be a recession. So we are definitely near there itself, right? Number two, if you notice this, that when the inflation data may peak, right, the stock market will fall first. Now, why is that so? Now you think about it, it makes sense. If Federal Reserve is to increase interest rate by 75 basis points, or even worse, 100 basis points on the 27th of July, and if the GDP numbers on this 20th of July is bad, all right, so what happened? Everybody will sell further, right? So the market will react first, react all the way until the next CPI data, which likelihood will be better than this CPI data. But by the time that happens itself, the stock market may have sell down more than expected before we can see a recovery. So that means that in terms of time sequential, we may not get to see the positive CPI data before the stock market react. So which means that the stock market will react first, then the CPI data, then the market may bottom out from there itself, something like that. You understand my point? So that means that in terms of time-wise, right, we have the US banks going to have their data tonight. We will have CPI data. We're going to have this what you call FOMC, and then followed by GDP numbers. These few numbers will likely pressure the market down lower first before we bottom out. That is the reason why I felt that the Jim Cramer is not correct this time around. Okay, again, everybody has their right to the whole thing. I don't have a crystal ball at home, so I'm quite sure I may be wrong here itself. Okay, anyway, that is my view to share with you what happened in the past versus the current. Okay. So I'm going to just only talk about the US market today because I say it's short MAO and it's not the full MAO, right? So I'm going to talk about the US market for a quick one, and that's it for today. Yeah, I'm going to make a quick one right now. I'm going to show you my version 3.88 chart because I want you to see my KRW. So give me a short moment here as well while I get my charts up. All right, once again, guys, this is something you must understand. I'm doing this absolutely for free. I'm not charging you a single cent here as well. I just want you guys to benefit from this, okay? Only benefit, yeah? Okay, let's go. Now, take a look, guys. This is my Dow Jones chart at the moment. My Dow Jones chart already tell me it's a CCYR on the Dow Jones since 2 days ago. That's why there's some selling. And undeniable, my KSI is still green in color. That shows the buying interest is still there. But my KRW is red right now. So that is not a good sign, okay? It's not a good sign. So watch out for this. As long as my KSI stays green in color, there will still be some buying interest right now. But if the market goes below 30,679, there will be some selling. Now, don't forget, guys, today is above OP, above pivot 1. You should know the drill. Above OP, above pivot 1 is always a buy on the Dow Jones, at least for now. But if the Dow Jones later do break below 30,700 and go below 30,679, there could be further selling to come. Okay, watch out for that, selling to come. And if the KSI ever turn red and my KRW is red, the selling will really come in. So at the moment now, still no need to ring the gong first, okay? Let's look at Nasdaq. The Nasdaq today is a doji directional day. As you can see on the screen right now, it's a doji directional day. So today, as long as the market Nasdaq stays above the 11,649, it's a buy because the Nasdaq is above pivot 1. Now, do note, as long as the market stays above OP and pivot 1, no matter what I tell me, it's a buy. So even though my KSI is red, my KRW is red, don't worry, guys. I say once again, all right, wait for the market to come down. So at the moment now, if the Nasdaq stays above 11,649, the Nasdaq is safe. But if Nasdaq later goes below 11,649, the selling will come. Why? Because you can see very clearly, guys, this is what I meant. When my KSI and my KRW together are combined together, that is the power here. So you can see when the Nasdaq actually has the KSI and KRW turning red at the same time, bang, the selling of the Nasdaq came down. So this is why my PTP students love my indicators, because they know that with all this thing in line, they will know what to do exactly, okay? So guys, this is the Nasdaq. Last but not least, S&P 500. That will be the last one for today. S&P 500 now have the same thing like the Dow Jones. The market did a CCYR, but the KSI and KRW now is actually on the different side. So there's some buying at the moment. And same thing again today is above pivot 1 at 37,82, right? So as long as the market stays above 3782, the S&P 500 is still considered okay. But if the market loses that itself, then there will be some selling down. Now, do note one thing to take note of. The S&P 500 is now still below the 80% mark, which means that, right, any place below this line here itself is the 80% mark, which is a bear territory. So the bear territory is still going to give some selling pressure to the market overall, okay? So that will be all for today on the US market. This is a US market wrap up. So I hope that you guys enjoy this. So in short itself, I'm saying this, as long as the Dow Jones stay above 30,700, the buying is still all right. But once the Dow Jones loses 30,700, the selling will begin once again. All right, guys, that will go for today. I'll see you tomorrow for tomorrow's official MAO. This is Kel signing off. And remember, guys, do me a favor. I have a class coming up soon. So remember, join our TWB basic class. All right, I will love you guys to come in. This is my final basic class for myself, the final one for me teaching you in person. Okay, this is the final one. Okay, bye-bye, guys. Take care. See you. Cheers.